A very good morning and a happy Thursday. Start of a new month and a new quarter. Wishing you the very best. We'll talk about three things in today's episode. First quarter roundup, Biden's infrastructure plan, and ARK altered its prospectuses. Financial markets went into overdrive in the first quarter of the year. Meme stocks such as GameStop surged. Celebrities dove into blank check companies. Christie's auctioned off a non-fungible token attached to a digital image for $69 million. And just before the quarter's end, a fire sale of stocks that Archegos Capital Management had bet on caused well-known companies like Viacom and Discovery to tumble. I like the way Wall Street Journal covered this. If there is a unifying theme to all this, it is that investors, big and small, showed no fear of risk-taking to start 2021. In fact, they embraced it. Interest rates jumped last quarter, but they remain near historically low levels. The 10-year Treasury yield is around 1.7 compared to 0.9 at the start of the year. Stocks are setting near records, with the S&P 500 up 5.8% for the year. The Dow Jones is up 7.8%. Factor in social media and few rounds of government stimulus checks, and it almost makes sense why many investors have been so drawn to speculative corners of the market. Some sense seemed to creep back in the quarter's final session though. Wednesday saw GameStop, AMC and other so-called meme stocks fall, while tech made a strong rebound. But there was a speculative nature to the upswing as well. Note that Apple gained 2% after UBS upgraded the iPhone maker to a buy rating. That move was based in part on the real option value of the company's likely entry into the auto market, something Apple has never confirmed. Apple shares rose nearly 2% for the day, reflective of investors' general unbridled enthusiasm for anything EV. For the day, the Nasdaq was higher by 1.5%, while the S&P 500 edged up 0.4% and Dow Jones slipped down to 0.3%, weighed down by declines in the financial sector. For the quarter, as I mentioned, Dow was up 7.8%, S&P 500 gained 5.8%, and the Nasdaq added 2.8%. The Nasdaq, up only 1.2% for the quarter heading into Wednesday's session, gained more on the last day of the period than it had for the previous 3 months as the tech sector continued its recent bout of volatility. On to more details of the infrastructure plan. President Biden unveiled a $2.3 trillion infrastructure plan centered on fixing roads and bridges, expanding broadband internet access, and boosting funding for research and development, plus higher corporate taxes to pay for the package. It's not a plan that tinkers around the edges, Mr. Biden said during a speech at Pittsburgh, where he kicked off his presidential campaign as well. It's a once-in-a-generation investment in America, is what he remarked. The infrastructure plan could cost roughly $2.3 trillion over 8 years and be paid over 15 years by raising the corporate tax to about 28% from 21% and increasing taxes on companies' foreign earnings. The tax changes could revamp or replace much of the international tax structure congressional Republicans had established 4 years ago in a law signed by then President Donald Trump. Notably, the plan would set the minimum tax on US companies' foreign income at 21%, up from 10.5% today, and it would set the tax so it applies to profits earned in each country rather than letting companies combine their income globally. I think that's an important distinction. Administration officials said that would limit companies' ability to book profits in tax havens, while businesses warn of complexities and unforeseen consequences. This one point stood out to me, at least on the tax bit. Remains to be seen how businesses really react to it and how the stock market reacts to it, considering the amount of money that's booked in offshore centers for large US companies. A few more details. Biden's proposal includes $621 billion to modernize transportation infrastructure, $400 billion to help care for aging and those with disabilities, $300 billion to boost manufacturing industry, and $213 billion on retrofitting and building affordable housing, and $100 billion to expand broadband access, among other investments. The plan, which requires congressional approval, calls for modernizing 20,000 miles of roadway, building 500,000 electrical vehicle charging stations, replacing the country's existing lead pipes and service lines, repairing aging schools, expanding home care for the elderly and disabled, and investing billions of dollars in domestic semiconductor manufacturing. Biden also proposed mandating that more of the country's electricity will be generated from low carbon sources, with a goal of eliminating carbon emissions from the power grid by 2035. So a pretty comprehensive plan, if you ask me, touches the right elements not only of the current economy but also how they're addressing the future. Let's see how this thing plays out. Lastly, ARK altered the prospectus of its ETFs in a filing last week to remove clauses limiting its exposure and concentration risks. The changes eliminate a 30% cap on how much of each fund assets could be invested in securities of a single entity, and a 20% limit on the amount of company shares an ETF could own. It also introduced language acknowledging funds may buy into blank check firms. The ARK Autonomous Technology and Robotics ETF, which is ARKQ, last week bought shares of a SPAC backed by tennis star Serena Williams. That's the update. Stay safe and healthy. Enjoy the long weekend ahead, and I'll speak to you on Monday.